Welcome to Markets Now. I'm Michelle Rook along with John Payne with Hedge Global Markets. Well, we did have a mostly lower close on Friday in the livestock futures, except for nearby live cattle futures. While we did see grains to the plus side. And John, not only did we have a higher day today on Friday, but we had higher weekly closes in all the grains. So let's talk a little bit about wheat first. We had that key reversal on Wednesday. Do you think we put a bottom in the wheat market, and can that help bottom corn and soybeans?
I think in the short run, we've got a low that should hold. I think the markets took it on the chin here over the last 2 weeks into delivery. So kind of been broken record on this, but delivery is important. I think in these big supply markets like wheat, where domestic supply is pretty much what we hang our hat on right now. I think that the new crop delivery is going to pressure price in the more medium term. I think in the longer run, those lows that maybe we see again do hold, and that's where I think we kind of reconstruct, especially based on what the new crop acreage is going to look like. There are some weather problems to speak of in wheat. Argentina still dry, and they're now in their harvest period where they'll plant wheat behind what they've grown or have not grown this year. So that's a bullish factor. And then we have just an overall uncertainty around this Black Sea trade over the next 2 weeks. So for your calendars, you have a 14th election in Turkey. I think that's Sunday. I could be wrong on that date. Don't hold me to it. But it's basically going to elect or move on from the president who is essentially negotiating this Black Sea grain deal. So I'm not going to butcher his name, but the president of Turkey, if he gets would be ousted in office, you're going to bring in a new party who might not be friendly to Russia as Turkey has, and that's really where the wheat market could really fall apart. If there's anything that blocks Russian supply from getting out of the Black Sea and into the Mediterranean, really into North Africa where it needs to get, it's going to make Western prices spike because we're going to be the ones who are going to have to deliver. So, not saying that's going to happen, but I think that's maybe what's got the market a little bit nervous here.
Gotcha. Well, it's nice to see it wasn't just all technical in nature. Of course, we didn't
Yeah.
see key reversals in corn and soybeans, but we did see higher weekly closes there. Do you think we can build on that in the coming week, or what would stop us from recovering?
Well, good conditions, a good crop out of Brazil. We saw the Brazilian premiums kind of come in here, but I think the market's slowly grappling with the idea that, hey, Brazil's got supply, but it's a little bit like Chinese supply. It doesn't really compete because it's stuck in places that it's not going to find the market. So, at least not right now. I think prevents runaway rallies in U.S. product, but you have two markets that have really developed here. You have a domestic corn market here in the United States, which I imagine are the folks I'm speaking to right now. The people that use grain around you seem to be doing okay. Ethanol margins have expanded here a little bit. Feed margins aren't that bad in the case of cattle. Hogs are a different story, but in the long run here, I think corn markets can survive in the U.S., and that means strong bases. So for me, I'd be short the paper, long the physical, meaning you want to own what the actual market. The paper itself is so easy to be pushed around, and I think these big supplies in Brazil can prevent a runaway rally on paper, whereas the physical, and I'm thinking, Northwest Iowa, you're trading north of $7 by the time midsummer rolls around.
Yeah, good point you make though, because the supplies out of Brazil are initially what kind of pulled the soybean market, especially down here with the big slide. So you mentioned that wheat had finally gotten to a price where we started to stimulate demand. Are we at that point or at that price level with corn and soybeans? Because we did not have a good week in terms of exports, especially on corn.
No, and we knew that. I mean, the Chinese cancellations were baked in the trade, and obviously the prices reflected that. I do think corn, it's a blending market right now, and by that meaning you have these different delivery points out in the future that are really different from where we are today in price. So you look at the May, we'll call it 650. You have the July, we'll call it 6, and you have the new crop September trading what we'll call it 630. So you have these big different gaps in the market, and it's like, how does it merge? Does it just merge and gap lower into these deliveries and we just assume the supply is there? Or do we see the markets kind of run, and meaning the cash leads us higher? So the delivery is really where the best prices can be, at least in the more shorter term. I think in the case of corn that can be. In the case of wheat, I'm more concerned. I just think we're overpriced in the case of the United States supply. In the case of corn, we're not. And especially for longer dated contracts, because a lot of that's assuming Argentina and Brazil production that really isn't there right now.
So will the July contracts kind of go up to where May went off the board or not?
I think early in the trade, that's the idea. At least for the game plan I would play, and I'm wrong a lot. Is the short term markets, and I'm speaking more on physical side, would be where it looks to perform. So don't be so quick to sell the board part of it early. The basis looks good, price the basis, and then maybe wait a couple of weeks on the board here. I do think you want to probably be shy of being long these markets into the June stocks report. I mean, there's going to be a huge volatile opportunity there. But the June stocks report, the July WASD, all of those time periods there combined with weather, if things look good here in the U.S. and we're looking at a carryover of 1819, probably looking at a price, down into those low fives again to retest. But I think at this point that the trigger we're going to start to hear from our acreage intentions by foreign planting. We've seen two big groups of farmers reduce acreage now. The first is the Russian farmer, Russia, Kazakhstan, a lot of the areas of the old Soviet Union that grow wheat, not really involved in this war, but they have taken a step down in regards to what they're planning to grow next year, just a little bit. And then we got some news this week. It's not new, more rumor, but from sources I really trust, think that the Brazilian farmer is going to take back some of these corn acres next year and replace them with wheat because that's where the market is. So that's actually bullish for corn as well, especially down the curve. So I work with a lot of folks who are end users, and that's the market I'm kind of interested in right now because I can buy $4 corn, and the question is, are we going to see the cash move there?
All right, what's your thought on cattle? Lower weekly close here. Do we need to correct more? Will the funds defend their long and come in here at some point? I mean, and have we put in a seasonal top in cash and cutouts?
I don't think we put a top in the cash. I think the cash will perform here once we get a little bit later in the year. I think in the shorter term, we've probably seen a high on those back end feeder cattles. I think a lot of it depends on weather. I know you didn't have me on to tell you that, but if we're drought hard in the panhandle, it's going to be tough to want to keep the market where it is. So I think in the shorter run here, it is a grain trade. I think the markets, especially with this Black Sea grain deal coming into fruition, or going out of fruition, I guess is the term. They'll be the dictating market, and then I think cattle kind of lags, especially if beef can trade sideways. I'm a little more skeptical because I watch the hog markets, and the hog markets have me sick and thinking, how can we trade at these levels on retail or on the pork with beef trading at 300? But here we are.
Yeah, I know it's like a 4-to-1 ratio there in terms of prices, so it does kind of defy odds. The hog market, what do you think there? Of course, we negated the higher weekly close last week with a lower weekly close this week, but is it a problem of supply, especially with now we're seeing this sow liquidation, or is it a demand problem?
I think it's the former. You mentioned the sow liquidation, and that's known, but the price of action we're seeing this week don't reflect. You see decent cash offerings. The retailers are being, I've heard the retailers are not helping much here, but even from where I sit, the prices are reflective of where we are. And we just can't seem to get the board to rally. So you have a market that I think as we move forward into time, those back end summer contracts are really hanging on by a thread here. And if the cash doesn't rally and we don't see the index rally, it's going to be difficult to hold the $20 premium, with only 3 months left. And I'm speaking of August, but everybody I read says we're going to get a bounce back in bellies here, and we'll be at 120 bellies by the time the summer rolls around. But I'm waiting patiently.
Yeah, one last question about cotton. We had a couple of really good days here at the end of the week. We had really strong exports on a weekly basis. Can we keep going?
Yeah, I think that the cotton story is really it's a Chinese rebound story. It's an economic story, and the jobs numbers that we got on Friday really point towards, the economy's okay. And I mean, if you go out, I don't know where you live, Michelle, but I mean, I go out to a shopping mall, I go out to a place. I went to Disney World 2 months ago, and I mean, it's just packed. So it's really hard for me to get too bearish on any of these commodities, especially a retail one like cotton, when I see my eyeballs see what's happening. But you and I, have watched the banking crisis kind of up front, and we're learning more and more about it. It's not a Main Street thing. This is a industry specific problem that will get ironed out. Might cost us in the long run, but I think in the short run we're okay. And I think commodities are breathing a little bit today.
All right. Thanks so much for joining us, John Payne with HedgePoint Global Markets. That is Markets Now.